another episode of David Hittle Real Estate Show. I am your host as always. I am David Hittle, a realtor with United Real Estate Louisville. And today we are going to be talking about home buying, the journey to buying a home. We're going to be talking about the cost of waiting for mortgage rates to go down. Yes, there is a cost in that. And also, we're going to be talking about two questions that every home buyer should be asking themselves right now. But before we get started, we do want to ask you that if you have a real estate need or you know someone who has a real estate need, please have them visit my website, Shopkentuckyhomes.com. And on that website, they are going to be able to get their current home's valuation if they're thinking about selling a home. They're also going to be able to find their next home via the website as well. And also, they will be able to get up-to-date market reports and up-to-date valuations, just so that they are aware of what is happening in our real estate market. And of course, they can always tune to this channel here on YouTube and also on Facebook for all the latest as well. So let's get started today. Don't want to hold too many people up from the watching of football. It's football season, so I don't like to hold you guys up any longer than I absolutely have to. Sorry, just making sure everything is muted so that we don't have any issues there. And also wondering whether or not I can even be heard on YouTube. I'm just going to guess that I can be and go on with the show. So here we go. Two questions that every home buyer should be asking themselves right now. And these questions are because of the rising interest rates, and that has begun to slow our overheated housing market, but it is also making monthly payments rise as well, and they have risen dramatically since the beginning of the year. And of course, this is leaving some people who want to purchase a home priced out of the market, and others are wondering if now is the time to buy one. But this rise in borrowing cost shows no signs of letting up anytime soon. Economic uncertainty and volatility of the financial markets are causing mortgage rates to rise. That's what's causing it. It's not the housing market itself causing mortgage rates to rise. It's the economic uncertainty and volatility of our financial markets. And we're seeing a lot of that coming out of the Federal Reserve and the raising of their interest rates. George Ratiu, the senior economist and manager of economic research at Realtor.com, put it this way, quote, while even 2 months ago, rates above 7% may have seemed unthinkable, at the current pace, we can expect rates to surpass that level in the next 3 months. So again, 7%, the experts are projecting, are expecting that rates will rise above 7% over the next 3 months. So again, the question is now the right time to buy? And anyone thinking about buying a home today should ask themselves these two questions. Number one, where do I think home prices are heading? Where do I think home prices are heading? And there are two places to turn to answer this question. First is the consensus of what experts are saying. If you look at what experts are projecting for home prices in 2023, they are forecasting home appreciation around 2%. And that's actually low. That seems like a very conservative number to me, thinking about how much demand there is and how little inventory there is. 2% rise seems very conservative to me. And while it's true that some are calling for depreciation, which would mean home prices are actually going to come down, most are calling for appreciation in home values over the next year. The second spot to turn for this information is the Home Price Expectation Survey. And this is done by Pulsenomics, a survey of a national panel of over 100 economists, real estate experts, and investment and market specialists. So the smart of the smart. And according to the latest release from them, they are showing about the same. They're expecting a 9.75% increase in home price for 2022. They are projecting 2.56% for 2023, 2.66% for 2024, 3.66% for 2025, and 4.01% for 2026. So they are projecting a large decrease in the appreciation of homes going from 2022 to 2023, but they are projecting that 2023 and beyond, those home prices are going to continue to rise. And again, that seems very conservative to me. The second question that you should be asking yourself if you were thinking about purchasing a home this year is, where do I think interest rates are headed? Like mentioned above, Ratu sees mortgage rates rising over the next several months as well. And another expert agrees. Mark Fleming, the chief economist at First American, put it this way. He says, quote, while mortgage rates are expected to continue to drift higher over the coming months, much of the rapid increase in rates is likely behind us. And actually, this week, we actually saw a 0.04 percentage point drop in average interest rates on a 30-year fixed rate mortgage. So we went from 6.7 to 6.66. Interesting number, but that was the 30-year fixed rate average for this week was 6.66%. Happy Halloween. The instability in the world and high inflation is what is driving this volatile market. And it is resulting in higher borrowing rates for those looking to buy homes. So again, answer those two questions for yourself if you are thinking about buying a home right now. Where do I think home prices are heading? And the experts are saying they're going to keep going up, although at a slower rate. And where do I think interest rates are heading? And the experts are saying they are going to continue to rise as well because of our volatile financial markets. So the bottom line here is, if you are thinking about buying a home, asking yourself about home prices and mortgage rates will help you make a powerful and confident decision. But you should not make that decision alone. You should consult with a realtor so that you are in the know of what is happening in your local market. According to all the figures I'm seeing, home prices are going to continue to rise in our area. Our inventory is actually doing better than it normally does at this time of the year, with over 2,000 listings on the market just here in Louisville alone. So home owners are still selling homes, while home buyers, some of which are getting priced out of the market, are starting to drift out of the market. They may start to come back in once they figure out that home prices are just going to keep going up and interest rates are going to keep going up as well. But again, don't make these decisions alone. reach out to a realtor. You can reach out to me, David Hittle, with United Real Estate Louisville, so that you have all of the information you need to make that powerful and confident decision. And there are several ways you can get a hold of me. If you're watching here today on Facebook, then you can easily find out how to contact me. You can either Facebook message me. You can visit my Facebook business page. You can message me there. I believe my cell phone number is probably on Facebook there too, so you can definitely give me a call, give me a text. My email address is shopkentuckyhomes@yahoo.com, so you can always give me an email as well. If you're watching here on YouTube, all of my information is provided to you in the description of every video so that you can get a hold of me as well. But you, of course, can also visit my website, shopkentuckyhomes.com. You can visit me on Facebook at facebook.com/shopkentuckyhomes, or you can always give me a call or text as well. So the next thing we're going to talk about is the cost of waiting for mortgage rates to go down. And there's certainly a cost involved. Of course, mortgage interest rates have more than doubled since last year. But if we look at the overall historical trend, 7% even is not anywhere near the highs. If you ask your parents, you ask your grandparents about how much the interest rates were when they were buying a home, you can find answers like 10, 15, 20%. My broker, who's been in the industry for over 30 years, remembers selling homes when interest rates were well over 20%. People were still buying homes even when interest rates were over 20%. And that is because buying a home is the fastest way to increase your net worth. The value of your home is part of your net worth, and you build wealth based on the value of your home. So the other day I was looking at a map of home price value increases over the past 5 years. Over the past 5 years here in Kentucky, we have averaged over 58% rise in home prices since 5 years ago. What was that? 2017. So since 2017, on average, a home in Kentucky has increased over 58% in value. But if we look back even further, we look back to 1991, just over 30 years. Looking back over 30 years, here in Kentucky, the average home has increased in value over 200%. So if you had a $100,000 home 30 plus years ago, on average, that home is now worth almost $300,000 or over $300,000. I think about my grandfather. My grandfather bought his beautiful brick ranch back. It was a new construction back then. And I think he always tells me he paid about $13,000 for that home. There are homes in his neighborhood like his that are selling for well over $200,000. Well over $200,000. So $13,000, $200,000. That is your net worth. But the cost of waiting for mortgage rates to go down. So as you know, if you keep up with me, if you keep up with the news, mortgage rates have increased significantly in recent weeks and recent months. And that may mean you have questions about what this means for you if you are planning to buy a home. And here's some information that can help you make an informed decision when you set your home buying plans. First off, what is the impact of rising mortgage rates? So, as mortgage rates rise, they impact your purchasing power by raising the cost of buying a home and limiting how much you can comfortably afford. And here's how that works. Let's assume you want to buy a $400,000 home. That is the median priced home in America, according to the National Association of Realtors. It's actually a little bit under that. It's 389.5 is the median, but we round up to make this simple. If you are trying to shop at that price point and keep your monthly payment about $2,500 to $2,600 or below, here's how your purchasing power can change. So for a $400,000 house at 6%, you're looking at a monthly payment, just principal and interest, of about $2,400. As that 6% rises to 7, your payment goes from $2,400 to just over $2,600. And if that reaches 7.5, then you're looking at almost $2,800 for a $400,000 home. So as you can tell, when we're at 6%, we're at about $2,400. If you go to 6.5, we're right at $2,500. When you go to 7, you're right at about $2,600. And then when you go to 7.5, you're right about $2,800. So for each half a point, you're looking at about $100 or more, depending on the price of the home, of course. So as mortgage rates increase, so too does your principal and interest payment on your home. And that does not include taxes. That does not include homeowners insurance. That does not include private mortgage insurance if you don't put down 20% on your loan or you don't qualify for a VA loan. So those numbers can seem overwhelming and they can seem distressful if you are going into a home purchase without putting down any down payment, if you're not putting down any amount of money. But say that you are looking for that $400,000 home, but you're going to put down $40,000. Well, if you put down $40,000, your actual loan amount is only $360,000. So at $360,000 at 6%, you're looking at $2,158 a month. That's just principal and interest again. If it goes to 6.5, then you're looking at $2,275, about $125 difference. If it goes to 7, then you're back at the $2,400 that you would have paid at 6% on $400. And then if we see 7.5%, then on a $360,000 home loan, you're looking at $2,500. So just that little bit of difference, that amount of money saves you monthly. So again, look at that. $400,000 at 6% is $2,398. If you put down $40,000, then your payment goes from $2,398 to $2,158. So you save $140 if you put down the $40,000. So you have to look at all those factors and factor all of that in when you're thinking about purchasing a home. And again, as rates go up, the amount you can afford to borrow decreases. And that may mean you have to look at homes at a different price point. That's your other option. If you don't have money to back up the rise to buy down your rates, a lot of people are buying down their mortgage rate now. A lot of sellers are offering to buy down the buyer's mortgage rate for them. Helpful, very, very helpful. There are ways around it. You just have to be determined that you are going to purchase a home and you have to go get pre-approved, get pre-qualified, and be ready to go when you see that house that you want to make an offer on. And that is why it is so important to work with a real estate advisor to understand how the mortgage rates impact you monthly. And also, great to have a lender who is willing to be upfront and honest with you about what you can afford and what the impact of these mortgage rates are as well. So you may ask another question, are mortgage rates going to go down? And no one has a crystal ball to think about this, but Realtor.com puts it this way, quote, many home buyers likely winced upon hearing that the Federal Reserve yet again boosted its short-term interest rates by 0.75 of a point, 0.75, a move that's pushing mortgage rates through the roof, and the already high rates are going to get higher. Unfortunately, interest rates are going to get higher. Now, the historical trend is that as inflation comes down, mortgage rates will come down as well. But right now, inflation is running rampant. The Federal Reserve is trying to push inflation down. So in theory, if the Federal Reserve pushes inflation down, then interest rates should come down as well. But at this point, at this moment, that is not what we're seeing. We're seeing the Federal Reserve raise rates, and so too are the mortgage interest rates going up as well. So if you are waiting for mortgage rates to drop, you may be waiting a while as the Federal Reserve works to get inflation under control. And if you are considering renting as your alternative while you wait it out, remember that's going to get more expensive with time as well. Nadia Evangelo, senior economist and director of forecasting at the National Association of Realtors, which I am a member of, puts it this way: there is no doubt that these higher rates hurt housing affordability. Nevertheless, apart from borrowing costs, rents additionally rise at their highest pace in nearly 4 decades. So you also have to think about it this way. During COVID, a lot of renters were unable to pay their rent. But because of the actions put in by Congress, landlords could not evict renters that couldn't pay their rent due to the coronavirus. So landlords may have gone months and months and months without receiving their rent, on top of not being able to evict those tenants to get somebody in that will pay their rent. And on top of that, they're having to pay higher taxes. Inflation's going up. If they have to repair something in the home or in the apartment, then they're being charged more. And if they have a mortgage on their property and it just happens to be an adjustable rate mortgage, then their mortgage payment is going up as well. So landlords are raising their rent, and according to Nadia Evangelo, rents are rising at their highest pace in nearly 4 decades. That's 40 years. So basically, it is true that it is going to cost you more to buy a home today than it did last year. But the same thing is true about renting. So this means either way, you are going to pay more. The difference is with home ownership, you are also gaining equity over time, which will help grow your net worth. The question now becomes, what makes more sense for you. And as I put it, you are paying a mortgage. It's a matter of whether you're going to pay your own mortgage or your landlord's mortgage. The bottom line here is every person's situation is unique. And that is why you need to connect with a real estate advisor and a trusted lender, home loan lender, who will be honest with you about what factors are involved, the costs involved, and whether or not you are ready to go on your journey of home ownership. And again, to make the best decisions for you, we should connect and explore all of your options. And that is important. It is important to not go into these crucial financial situations alone. Your home is probably one of the most valuable things that you will purchase. Most people's home is a majority of their net worth, especially when they're younger. So if you are thinking about purchasing a home, connect with a realtor. You can connect with me, David Hittle, with United Real Estate Louisville, so that you have an expert in your corner and so that you have a trusted advisor in your corner, making sure you are on the ball and have all the information that you need to make a good financial life decision. Finally, today I want to talk about the journey to buy a home. And I have broken this down into 9 steps, 9 easy to follow steps. And these are just the key milestones that you'll encounter on your path to homeownership. There's actually hundreds upon hundreds of things, individual little things that occur when you buy a home. But these are the 9 milestone moments just to keep you on track. That way you know what is next and you can be prepared. So first off is building your team. Building your team. So you should kickstart the process by finding trusted experts to guide you along the way. Your first trusted expert should be a real estate agent or a realtor, because that individual can connect you to other people that you will need on your team in order to make your home ownership journey a success. Your realtor should connect you with a trusted home loan lender who can get you started on the financial paperwork and get you ready and pre-approved, pre-qualified, and get you the pre-qualification letter letting home sellers and homeowners know that you are ready to go. You are a qualified individual. Your realtor will also connect with a title company, and the title company will work on the paperwork to give you the title to the house, to give you the deed to the house. They will ensure that everything is clean, that the previous owner or the current owner doesn't have anything that would, quote, cloud the title or anything, lien, things of that nature. You definitely don't want to find those out later. So building your team is the very first step. Realtor, lender, title company. And those 3 individuals or organizations will be able to get you started towards your journey and on your journey to home ownership. Second thing is to check your score. Check your score. So your lender will do this for you. When you submit your home loan application to the home lender, to the trusted home lender, they will look into your credit score. They will look into your income. They will look into your debt, because all of those things factor into how much home you can afford. Your credit score is a major factor because if you have a lower credit score, you may not qualify for certain home loans versus if you have a higher credit score, you may qualify for more. Then, of course, you also have to look at the different home loans. You have everything from an FHA, which is the most typical. It's the most common. You have conventional, which require higher credit scores. You have Veterans Affairs or VA home loans for our servicemen and women who served our country and were discharged generally or honorably. They may have earned Veterans Affairs home loans. And then you also have USDA, which is for rural housing. If you want to live outside of the city limits in a rural area that qualifies for USDA, that's another type of loan. There's also loans like jumbo loans. If you're looking at purchasing a rather expensive home, I believe the jumbo loan is now over 680. Those loans have higher interest rates because there's more risk involved. So your lender will check your score. They'll check your income. They'll check your debt. Be honest with your lender. I cannot tell you how crucial it is to be honest with your lender. If you plan on putting money down on your next home or on your first home, let your lender know that. Because if you get pre-approved for $150,000, but you plan to put down $50,000, then you can actually be pre-approved and pre-qualified for $200,000. So if you plan on putting money down on your home, then make sure that your lender knows that information. Your realtor doesn't have to know if you don't want them to know, but your lender is the financial cog in the wheel, and they need to know what type of money you are bringing to the table. Number 3 in the list is boost your savings. So again, you will be talking about down payment. You will be talking about closing cost. You will be talking about appraisal. You'll be talking about home inspection. You'll be talking about pest inspection. All these things cost money on your journey to home ownership. So if you're looking at a FHA loan, the most common loan, then you're looking at least a 3.5% down payment. That's on the final purchase price of the home. 3.5%. So on a $100,000 home, that's $3,500. On a $200,000 home, that's $7,000. You get the picture. 3.5%. If you don't have that, if you don't have that type of money sitting around, then you need to speak with your lender about down payment assistance options, because there are a ton of down payment assistance options, but not all lenders qualify for them. So if you came with your own lender to the table, to your realtor, and they don't have the ability to give you down payment assistance options, then you may want to consider your realtor's lender, because you may need the down payment assistance options that are available to you. If you're talking about a conventional loan, most conventional loans require a 5% down payment. If you're talking about a Veterans Affairs or VA home loan, you can have as little as 0% down payment. You do on VA loans have to pay a VA funding fee, but that funding fee is normally less than 3.5% on an FHA, and it can be rolled into your VA loan. You can also qualify, if you are eligible, for a completely 0% VA home loan with no VA funding fee, depending on your combat-related injury status. So don't be offended if your realtor asks you if you have a combat-related injury if you are a veteran. Talking about USDA loans, the rural housing loans, those are 0% down payment. You can still put a down payment down if you want, but they do not require one on rural housing loans, USDA, for qualified properties. So I tell my clients to have at least $500 for a good faith deposit. That's primarily based on the value of home that you are seeking. If you are buying a $500,000 home, then obviously we're probably not going to put down $500. We're going to put down more like $1,000, $2,000, $5,000. But it will all really depend on the price of home that you are looking for. You're also talking about things like appraisals. Your appraisals sometimes have to be paid for before closing. Sometimes they're paid for at closing. Just depends on your lender. So you need to factor that in. Home inspection. I will always highly recommend my clients receive and get a home inspection by a third party. It is better to spend about $500 to discover the things that you want to discover before you spend hundreds of thousands of dollars on your home. Number 4 on the list of 9 steps to your journey of home ownership is know your numbers. Discover what you can afford based on mortgage rates, income, and more. That's something your lender can do. They can look at your income, they can look at your debt, and they can tell you, here is what you can afford, and here's as high of home I would go with. They will be honest with you if they are a good home lender. You should also get pre-approved by your home loan lender. That will help you when it comes time for making an offer. So that I, your realtor, can submit your pre-approval or your pre-qualification with your offer to make your offer seem a whole lot stronger than it would otherwise be. Number 5 is then go house hunting with your realtor. Explore homes, explore home types, determine your must-haves with your agent. What you want, what you need, what you must have. Discuss those things with your realtor because your realtor will be able to formulate that criteria into a home search to find you the homes that you want to see in your price range in the area that you want to live. Number 6 is you make an offer. Meet with your agent. Draft the offer and negotiate with the seller. Buyers are getting a lot more negotiation options now. A year ago, 6 months ago, you may have thought you needed to waive your home inspection, waive your appraisal, pay way over asking price. Those days are starting to fade. We are not seeing as many offers on homes as we did last year, especially 6 months ago, especially. So you are receiving, as a home buyer, more options in negotiation. Number 7 is get an inspection and get an appraisal. Rely on these third-party professionals as they determine the value of your home and the condition of your home. And then if there's something wrong, we can renegotiate with the seller at that point. Number 8 is make it official. On closing day, you sign your final documentation and you get the keys to your home. And number 9 is you move into your home. Send in the movers because it's time to make your dream a reality on move-in day. And that is the best day ever when it comes to buying a home. So everyone, stay focused on what is happening in our real estate market. Continue to tune in, because even if you are not looking to buy or sell a home anytime soon, you need to know what is going on in our housing market and in our financial markets. And you don't want to take your news from the over dramatic news networks that are there to try to scare you, that are there to tell you the world is coming to an end, that Armageddon is right around the corner. You need trusted people in your corner. You want a realtor with the heart of a teacher, someone who is continually educating themselves and staying focused on the number one job that they have, making sure that you have all the information that you need to make these important and expensive decisions. Don't go it alone. Don't try to buy or sell a house by yourself. Go find you a realtor who can help you through the entire process, and someone you can always just bounce questions off of. If I don't know the answer to something, I will get you an answer. So for everyone here, it's just me. My wife is sleeping in the other room, so I'm probably being too loud. But for everyone here, this is David Hittle with United Real Estate Louisville. I want to thank everyone. I want to thank my clients. I want to thank my past clients. I want to thank my friends. I want to thank my family. I want to thank my colleagues for referring me to your friends, family, and other colleagues. That is how we make it as business owners, is through word of mouth. So if you know of someone who's looking to buy or sell a home, maybe next year, maybe in 6 months, maybe 2 years, maybe 3 years, maybe 5 years from now, please connect them to me so that I can keep them informed of what is happening in the market so that they make the best decisions possible. So again, this is David Hittle with United Real Estate Louisville. It is beer and pizza day. I'll skip the beer, but I'll take as much pizza as you want to give me, as much as my tummy can hold. So for everyone, I want to thank you all for tuning in. Thank you all for being patient. I know it's football day. I'm going to let you go. I'm going to go watch some football too. For David Hittle with United Real Estate Louisville, have an amazing Sunday. Have a great day.